Hi class. Today we're going to talk about chapter 3, which is process costing. The learning objectives include explain the process costing and compare it with job order costing. In the appendix, we look at the process activity costs and prepare a production cost report using FIFO. From an analytical standpoint, we'll look at the hybrid costing system and analyze process system yield. Procedures will compute process activity costs using the weighted average, prepare a production cost report with weighted average, record the flow of production costs in process costing, and record the transfer of goods across departments to finished goods inventory and the cost of goods sold. The first learning objective is we'll talk about explain the process costing, and we'll compare it with job order costing, which was in chapter 2. So process costing, when you're talking about mass production of similar items, and you have a continuous flow of sequential processes, and then standardization is very, very important. So an example would be General Mills, for example. Cereal is pretty much all the same thing. They could make it all at at the same time and process it. There's some other examples here like Pepsi or Hershey chocolate bars. They're all the same, right? You get the idea. So the way that they process, there's an organization of the process of operations. So each process has a separate production department. And then each process applies direct labor, overhead, direct materials, and that's moved into the product into completion. And then at the end of the day, the final process is in a series of finished goods and makes them ready for sale. So looking at the graph below, you have materials, then your raw materials, then you go to the roasting department, the blending department, and then finally the finished goods inventory. Here's another example. This is a comparison of process and job order costing systems. So from chapter 2, you look at the graph of the car there where we have a job order system. And then below it we just talked about is the process system. And so you can see, how they're different. So some of the other differences we have here are cost object. The job order system, the cost object is a job or a job lot. The process system, the cost object is the process or the department. With cost per unit, the job order system measures the cost per unit after completion of a job. With the process system, basically it measures unit costs at the end of the period, maybe every month or so, by combining cost per unit from each process. Internal reporting, the job cost system, we use job cost sheets. With the process system, we have a production cost report. With the work in process inventory, job order system would have one work in process inventory account, but the process system, we have one work in process inventory account per each process. But all in all, this is a pretty good comparison. Next, we'll talk about how do we compute process activity costs using the weighted average. So that's one of the inventory methods that we learned about in financial accounting. So the weighted average method, it basically combines unit and costs across two different periods in computing equivalent units and cost per equivalent unit. Basically, there's 4 steps here that you need to go through. We want to determine the physical flow of units, compute equivalent units of production, compute cost per equivalent unit of production, and assign and reconcile costs. So with step 1, we want to determine the number of units to account for and units accounted for. So with fit mix, a unit is a cup of trail mix. If you look at Exhibit 3.3 and 3.4 in your book, we can see production data in units for the first process. So we have the roasting department. On the left, we compute the 120,000 units to account for, which are the 30,000 units in the beginning work in process inventory plus the 90,000 units started this period. On the right, we reconcile match with the 120,000 units accounted for, which are 100,000 units completed and transferred out, plus 20,000 units in ending work in process inventory. A physical unit flow reconciliation proves that, well, 1, beginning units in process plus those started in the period equals this 2, ending units in process plus those completed and transferred out in the period. A physical unit flow reconciliation for the roasting department for April is shown in Exhibit 3.4. Next, with step 2, we have to be able to compute the equivalent units of production. So the formula, equivalent units of production, EUP, is the number of whole units that could have been started and completed given the cost incurred in the period. The reason we want to use equivalent units of production is that some units are not finished at the end of the period, but they still need to be assigned costs. Looking at 3.5, this shows the percent of complete data for direct materials and conversion for the roasting department. Those percents are needed to compute equivalent units of production. In both roasting and blending, direct materials enter production at the beginning of the process, while conversion costs occur throughout each department's processing. Conversion costs are made up of direct labor and applied overhead. They are called conversion costs because those are the costs of converting raw materials into finished goods. We see here that the beginning work in process inventory is 100% complete for both for direct materials, but only 65 complete for conversion. Ending work in process inventory is 100% complete for direct materials, but only 25% complete for conversion. Units completed and transferred to the blending department are 100% complete for both direct materials and conversion. We have to separately compute equivalent units of production for direct materials and conversion costs. The reason is that because direct materials and conversion costs typically enter processes at different rates. We can see this is true for fit mix in Exhibit 3.5, where there are different percents of completion for direct materials and conversion costs for both beginning and ending work in process inventories. Step 2, compute the equivalent units of production. So here's your formula. Equivalent units of production, EUP, equals equivalent units completed and transferred out plus equivalent units ending work in process. So this is the formula, and this is using the weighted average method for both direct materials and conversion costs. We have to compute the EUP for both direct materials and conversion in Exhibit 3.7. We started with the 120,000 units accounted for from Step 1 and convert them to EUP. Units completed and transferred out are always 100% complete for both materials and conversion. This means the roasting department completed and transferred 100,000 EUP for both materials and conversion. Ending work in process inventory has 20,000 partially complete units. Direct materials is 100% complete. This means it has 20,000 EUP, or 20,000 units times 100%. Conversion is 25% complete. This means it has 5,000 EUP, 20,000 times 25%. Total equivalent units of production equals 120,000 for direct materials. So 100,000 plus 20,000, and 105,000 for conversion, which is 100,000 plus 5,000. The amount of inputs used to produce 100,000 completed units and to start 20,000 additional units is equivalent to the amount of direct materials in 120,000 whole units, and the amount of conversion is 105,000 whole units. Step 3. Compute the cost per equivalent unit. So, Step 3 uses the equivalent units of production from Step 2, along with cost data, to compute cost per equivalent. Production cost data for the roasting department are in Exhibit 3.8. Recall, conversion cost equals direct labor cost plus factory overhead cost applied. To compute cost per equivalent unit, we add cost for beginning work in process to costs added this period, and then divide by equivalent units of production from Step 2. Exhibit 3.9 shows this separately for direct materials and for conversion. The cost for direct materials is $3 per EUP, and for conversion is $4.62 per EUP. Step 4, assign and reconcile costs. So, Step 4 uses the EUP from Step 2 and the cost per EUP from Step 3 to assign costs to the 100,000 units completed and transferred out to the 20,000 units in ending work in process. These costs are accounted for in Exhibit 3.10. So, the cost of units completed and transferred out, the 100,000 units completed and transferred out used 100,000 EUP of direct materials and 100,000 EUP of conversion. Thus, we assign 300,000, which is 100,000 EUP times $3 per EUP, of direct materials costs to those units, and 462,000, which is 100,000 EUP times $4.62 per EUP, of conversion to those units. Total cost of the 100,000 units completed and transferred out is 762,000. So we add the 300,000 plus the 462,000. We get 762,000. The cost of units in ending work in process inventory. There are 20,000 units in the work in process inventory at period end. For direct materials, those units have 20,000 EUP from step 2 at a cost of $3 per EUP from step 3. This results in direct materials cost of work in process inventory of 60,000, which is 20,000 EUP times $3 per EUP. For conversion, we use the 5,000 EUP from step 2 and the $4.62 conversion per EUP from step 3 to compute conversion costs for work in process inventory of 23,100, or 5,000 EUP times $4.62 per EUP. Total cost of work in process inventory at period end is 83,100, or that's so 60,000 plus 23,100 is 83,100. Reconciliation. So management verifies that the total costs assigned to the units completed and transferred out, plus the cost of units in ending work in process, if you look at Exhibit 3.10, equal the costs incurred by production. So the total cost accounted for of 845,100 equals the total production costs of 845,100 from Exhibit 3.8. So next, we'll talk about using process cost information. So, we do this. Process cost information is used to, we want to control costs, we want to evaluate performance, we want to evaluate process improvements, and then at the end of the day, we want to prepare financial statements. So when we control costs, we look at the prior months and we make adjustments as we need. We evaluate performance. We look at the department managers and how they controlled their costs. And then with looking at the improvements, we look at how costs per EUP change after process improvements. And then with the financial statement preparation, we have the cost of goods sold and the ending inventory. And so with cost of goods sold, that's on the income statement, and then the ending inventory is on the balance sheet. Remember, inventory is an asset. So next, we want to prepare a production cost report using the weighted average. So here's a process cost report. So the production cost report, or process cost summary, summarizes the four-step process. It shows the results of exhibits 3.4, 3.7, 3.9, and 3.10 in one report. The production cost report for the roasting department is shown in exhibit 3.11. So this report, if you look at number 1, it includes the physical flow of the units. This reconciles the beginning units in process and those started in a period with the ending units in process, and those completed and transferred out. 2, equivalent units of production for direct materials and conversion. 3, cost per equivalent unit of production for direct materials and for conversion. 4, assignment of total costs among units worked on in the period. Thus, the $762,000 is the total cost of the 100,000 units transferred out of the roasting department to the blending department. The $83,100 is the cost of the 20,000 partially completed units and ending work in process inventory in the roasting department. The assigned costs are then added to show that the total $845,100 cost charged to the roasting department is now assigned to the units. Next, record the flow of production costs in process costing. So in Exhibit 3.12, we can see the flow of materials, labor, and overhead costs through the manufacturing processes. There are separate work in process inventory accounts for the roasting and blending departments. When goods are packed and ready for sale, these costs are transferred to the finished goods inventory account. When goods are sold, their costs are transferred to the cost of goods sold. While many companies combine direct labor and overhead into conversion costs when computing cost per equivalent unit, as we showed, direct labor and overhead costs are accounted for separately in general ledger accounts. Because overhead costs typically cannot be tied to individual processes, most process operations use a single factory overhead account to accumulate actual and applied overhead costs. Here, accounting for production costs. So Exhibit 3.13, there's cost data for Gen X's roasting and blending departments. We use this data to show the journal entries in a process costing system. So accounting for material costs. So these are your journal entries. Arrow line 1 from Exhibit 3.12 on the prior slide reflects the purchase of raw materials. Gen X uses a perpetual inventory system and makes all purchases on credit. Arrow line 2 shows the flow of direct materials to production in the roasting and blending departments. The manager of a process usually obtains materials by submitting a materials requisition to the materials storeroom manager. The entry to record the use of direct materials follows. These direct materials costs flow into each department's separate WIP or work in process inventory account. And arrow line 3 reflects the flow of indirect materials to factory overhead. These materials cannot be cost effectively traced to any specific production process or department, but are used in production. These costs are recorded in the single factory overhead account with the entry shown. Next, accounting for labor costs. So factory payroll costs are $171,000 for roasting department, direct labor $183,160 for blending department direct labor, and $78,350 for indirect labor. This total factory payroll of $432,510 is assigned to either work in process inventory under direct labor or factory overhead indirect labor. Arrow line 4 shows the use of direct labor. This entry records direct labor used. Direct labor costs flow into each department's separate work in process inventory account. Arrow line 5 reflects indirect labor costs. These employees assist in or supervise production in both the roasting and blending departments. For example, they order materials and deliver them to the factory floor, repair equipment, and operate and program computers used in production, clean up, and move goods across departments. The entry shown records indirect labor costs. Accounting for factory overhead is here. Overhead costs other than indirect materials and indirect labor are reflected by the arrow line 6. Other overhead items would include costs of insuring production assets, renting the factory building, using factory utilities, and depreciating factory equipment not directly related to a specific process. The center records these other overhead costs. Companies use a predetermined overhead rates to apply overhead. These rates are estimated at the beginning of a period and used to apply overhead during the period. This is important for process costing where goods are transferred across departments before the entire production process is complete. Factory overhead is applied to processes using activity bases such as direct labor or machine hours. So arrow line 7 shows factory overhead applied to the 2 production departments. Gen X applies overhead using a predetermined overhead rate of 120% of direct labor and records the journal entries shown here. Next, record the transfer of goods across departments to finished goods inventory and to cost of goods sold. So, transfers across the departments. So arrow line 8 shows the transfer of partially completed units from the roasting to the blending. The production cost report for the roasting department, which was Exhibit 3.11, shows that the 100,000 units transferred to the blending department are assigned a cost of $762,000. The entry to record this transfer is shown here. Units and costs transferred out of the roasting department are transferred into the blending department. Exhibit 3.15 shows this transfer using T accounts for the separate work in process inventory accounts. It first in units and then in dollars. We see that the blending department began the month with 12,000 units in beginning inventory with a cost of $151,688. Then 100,000 units and costs of $762,000 are transferred to the blending department from the roasting department. The blending department adds direct materials cost of $102,000 and conversion cost of $402,952 during the month. Accounting for transfer to finished goods. So arrow 9 in Exhibit 3.16 shows us the transfer of units and costs from the blending department to the finished goods inventory. The blending department transferred 97,000 completed units along with cost of $1,262,940 to finished goods. The entry to record this transfer is shown here. Accounting for cost of goods sold. So arrow line 10 shows the sale of finished goods. Let's assume that GenX sold 103,000 units of fit mix to this period, and that its beginning finished goods inventory was 26,000 units with a cost of $338,516. Also assume that its ending finished goods inventory consists of 20,000 units at a cost of $260,400. Using this information, cost of goods sold is computed as in Exhibit 3.16. GenX selling price for fit mix is $18.60 per unit. The entry to record sales of 103,000 units on credit for this period is shown with a debit to accounts receivable and a credit to sales in the amount of $1,915,800. The entry to record cost of goods sold for this period includes a debit to cost of goods sold and a credit to finished goods inventory for $1,341,060. So now we have financial state reporting, we have the income statement, we have the balance sheet. So GenX must prepare these financial statements. It reports the following on its April income statement, which is a partial statement, and a balance sheet, which is also partial. In making pricing decisions, managers often use the cost per completed unit. This computation for fit mix is $13.02. The cost of goods manufactured for a process manufacturer equals the cost transferred from the last production process to finished goods inventory. Generation X must set the price of fit mix high enough to cover its cost of completed units plus its selling and general and administrative costs in order to be profitable. So this slide basically just shows you some trends. So for example, trends in process operations. So process design would be, it has to do with production efficiency. It can lead companies to reorganize production processes. Example, instead of producing different types of computers in a series of departments, a separate work center for each computer can be set up in one department. The process cost system is then changed to account for each work center's costs. Just-in-time, JIT production, basically inventory levels can be minimal. If raw materials are not ordered or received until needed, a raw materials inventory account might be unnecessary. Instead, direct materials cost is immediately debited to work in process. Similarly, a finished goods inventory account may not be needed. Instead, cost of finished goods might be immediately debited to cost of goods sold. Number 3, robotics and automation. Many production processes are automated, obviously. This results in reduced direct labor costs. Machine learning can lead to process improvements that reduce costs and increase efficiency. For continuous processing, in companies, let's say Pepsi's bottling, materials move continuously through the manufacturing process. In these cases, a materials consumption report summarizes the materials used and replaces materials requisitions. With services, service-based businesses are common. For standardized services like oil changes, tax returns, computing costs based on the process is simpler and more useful than a cost per individual job. The last one, customer orientation. This focuses on customer orientation leads to improved processes. A manufacturer of control devices improve quality and reduce production time by forming teams to study processes and suggest improvements. So this is the appendix, but we'll go over it. Hybrid costing system and analyzes process system yield. So hybrid is when you have both a process and a job operation. It's also called operation costing system. So a hybrid system of process requires a hybrid cost system to properly cost products or even services. Assembly costs per car are computed using process costing. The costs of additional components are computed using job order costing. The cost of custom choices are then added to the assembly process costs to determine each car's total cost. So remember when we talked about if cars were a process or a job? Well, I think this answers our question. Manufacturing a car would be most likely with a hybrid with both systems. So here is an example here. So look at this information with our daily assemble processes. So the assembly process costs $22,600 per car. Depending on the type of wheels and sound system the customer requests, the cost of a car can range from $23,460 to $24,440. If the company's target markup is 20% above cost, its selling prices would range from $28,152 to $29,328. So yield, a measure of output divided by input, can be used to determine or to measure the efficiency of process operations. Example, if Ford entered enough direct materials into production to produce 10,000 Mustangs, but only 9,990 non-defective cars were produced, yield is computed as 99% as shown on this slide. If a trail mix manufacturer started 10,000 pounds of peanuts in production and ended with processed peanuts of 9,650, its yield is 96.5%. So you would take 9,650 divided by 10,000. Yield might be less than expected due to inferior direct materials or issues with the production process. When yields are lower than expected, managers ask why and take corrective action. So the rest of the appendix is the process activity costs and prepared production cost reporting, FIFO. So FIFO, first in, first out. So with FIFO method of process costing, we go through these 4 steps. Determine the physical flow of units, compute equivalent units of production, compute cost per equivalent unit of production, and assign and reconcile costs. So in each step, we will demonstrate the process costing using FIFO, first in, first out. FIFO assigns costs to units, assuming a first in, first out flow of product. And we'll look at how this affects the process costing system. So step 1, determine the physical flow of units, FIFO. In Exhibit 3A.1, the first step is to determine the number of units to account for and units accounted for. For fit mix, a unit is a cup of trail mix. Exhibit 3.A1 shows production data in units for the first process, roasting department. The units to account for is beginning work in process inventory plus units started this period. Units accounted for, and using FIFO, we look at 3 groups of units when determining units accounted for. Beginning work in process inventory, units started and completed this period, and ending work in process inventory. Beginning work in process inventory for roasting is 30,000 units, and its ending work in process inventory is 20,000 units. To get the number of units started and completed this period, we apply the following procedure. Units started and completed. FIFO assumes that the units in the beginning work in process inventory are the first units completed in the period. For fit mix, this means that of the 100,000 units completed and transferred out, we assume 30,000 are from beginning work in process inventory. This implies that 70,000 units were started and completed this period. So step 1, determine physical flow of units, FIFO. So in Exhibit 3A.2, it shows 3 groups of units for determining units accounted for. Determine the flow of units. A physical unit flow reconciliation proves that 1, beginning units in process plus units started in the equals to the beginning units in process plus units started and completed plus units and ending work in process. A physical unit flow reconciliation for the roasting department for April is in this exhibit. To compute equivalent units of production for FIFO. So we have your formula here. So step 2, EUP is the number of whole units that could have been started and completed given the cost incurred in the period. Exhibit 3A.4 shows percent complete data for direct materials and conversion for the roasting department. The percents are needed to complete equivalent units of production. In both roasting and blending, direct materials enter production at the beginning of the process, while conversion costs occur throughout each department's processes or processing. Conversion costs consist of direct labor and overhead. They are called conversion costs because those are the costs of converting raw materials into finished goods. We see that the beginning work in process inventory is 100% complete for direct materials, but only 65% complete for conversion. Ending work in process inventory is 100% complete for direct materials, but only 25% complete for conversion. Units started and completed that are sent to the blending department are 100% complete for both direct materials and conversion. We separately compute equivalent units of production for direct materials and conversion costs. This is because direct materials and conversion costs typically enter processes at different rates. We see this for fit mix in Exhibit 3A.5 or 3A.4, where there are different percents of completion for direct materials and conversion costs for both beginning and ending work in process inventories. This exhibit shows the formula to compute equivalent units of production under the FIFO method for both direct materials and conversion. Step 2. Compute equivalent units of production with FIFO. So, with direct materials, the total equivalent units of production is 90,000 for direct materials. So we have 70,000 and we have 20,000. Beginning work in process, well, we already had 30,000 that were 100% complete with respect to direct materials. EUP is 0 at no direct materials were added to complete these units. Started and completed units were 70,000. These units received 100% of direct materials during the period, so EUP is 70,000. Ending work in process had 20,000 units started, but not completed during the month. These units received 100% of direct materials this period, so EUP is 20,000. Conversion, the total equivalent units of production is 85,000 for conversion. So 10,500 plus 70,000 plus 5,000. Beginning work in process had 30,000 units that were 65% complete for conversion. These units needed another 35%, so we subtracted 100% minus 65 to complete them. So EUP is 10,500, or 30,000 times 35% is 10,500. Started and completed units were 70,000. These units received 100% of conversion costs during the month, so EUP is 70,000. Ending work in process had 20,000 units started but not completed during the month. These units received 25% of its conversion cost this period, so EUP is 5,000, or 20,000 times 25%. Step 3 uses equivalent units of production from Step 2 along with cost data to compute equivalent unit. FIFO computes the cost per equivalent unit based solely on this period's costs. Production cost data for the roasting department are Exhibit 3A.7. Remember, conversion costs equals direct labor costs plus factory overhead costs applied. To compute the cost per equivalent unit, we take the direct materials and conversion costs added to this period and then divide by equivalent units of production from Step 2. Exhibit 3A.8 shows this separately for direct materials and conversion. The cost for direct materials is $3.10 per EUP, and for conversion is $4.40 per EUP. Okay, so step 4, the last step here, we have here step 4, assign and reconcile costs. So the EUP from step 2 and the cost per EUP from step 3 are used in step 4 to assign costs to A, units that the roasting department completed and transferred out to the blending department, and B, units that remain in process in the roasting department. This is shown in Exhibit 3A.9. So the beginning work in process inventory, the cost of beginning work in process is $189,900 from Exhibit 3A.7. These costs were carried over from the prior period for work already completed on the 30,000 units in beginning work in process. 2. Complete beginning work in process inventory. The cost to complete beginning work in process inventory is $46,200. We assign $0 of direct materials as there were 0 equivalent units. Recall EUP is 0 because beginning inventory was already 100% complete for direct materials. We assign $46,200 of conversion costs. This is the remaining conversion costs required on beginning work in process inventory to complete it for the next department. Started and completed, the 70,000 units started and completed this month used 70,000 EUP of direct materials and 70,000 EUP of conversion. We assign 217,000 of direct materials cost and 308,000 of conversion cost to these units. Completed and transferred out costs total 761,100. This consists of the cost of beginning work in process, the cost of complete beginning work in process, and the cost of started and completed units. These unit and costs move on to blending. Ending work in process inventory, there are 20,000 units in process inventory at period end. We assign $62,000 of direct materials cost and $22,000 of conversion costs to these units. Total cost of work in process inventory at period end is $84,000. Reconciliation. Management verifies that the total cost assigned to units completed and transferred out plus the cost of units in ending work in process equal total production costs. Exhibit 3A.9 shows total costs accounted for of $845,100, which equals total production costs of $845,100 from Exhibit A. And that is it.